Higher yields and concerns over the Fed sticking to higher for longer rates due to strong economic data drag Wall Street for the second session in a row. Headline indices correct, with tech the biggest underperformer. Asian markets trade mixed, while the GIFT Nifty implies a lower start for the Indian market. Oil continues to rally, recovers minor losses due to expectations of lower U.S. inventories. Brent crude holds above $90 a barrel. Supply concerns persist over extended output cuts by Saudi Arabia and Russia. And tech giant TCS signs a 5-year deal with Jaguar Land Rover valued at $1 billion for a wide range of services. This is the third $1 billion-plus deal to have been announced by the IT sector leaders this quarter. RBI governor sets a target of 1 million transactions per day using the central bank's digital currency by December. Also pushes the fintech industry to set up a self-regulatory organization by next year to promote ethical practices and protect users. The National Payments Corporation of India unveils a slew of new UPI products at the Global FinTech Fest. Launches include voice-enabled payments via UPI apps, pre-sanctioned credit from banks and offline payment applications, amongst others. Good morning and welcome to Power Breakfast. I'm Pavitra. Those are the top headlines that we have for you this Thursday morning. There's a lot to track, but first up for the markets, we've definitely not got a good handover as far as the US goes. We saw all of the key indices ending with cuts, with of course tech being the worst. And on the back of that, you have most Asian markets, actually all of them now, which are in the red. It's not too much of a loss for most of them, like you can see, but in the past few minutes, you've seen the Hang Seng slip even further. So that is now seeing quite a significant cut, around 0.7% gone over there. You have the Taiwanese index, which is down around 60 points as well. The other one, which is seeing a pretty big loss, is the Kospi, the Korean market. That is also down around 0.8%. But barring that, Shanghai is quite flat. Straits is seeing around 0.4% gone. And the Nikkei market is just around 0.2% in the red. So definitely starting on the back foot for the Asian markets. In fact, the GIFT Nifty will also come up for you, and it is indicating that the start for our own markets could be around 38 points in the red. That's where we're at right now. This is after we closed around 0.2% in the green yesterday. So looks like the start will definitely be a little bit weak, but let's see how things really move from there. Let's move on then and talk about how, the US markets also fared. Wall Street, like I was mentioning, ended Wednesday's trading session lower. So the Dow slid close to around 200 points. The S&P 500 was down 31, but the main pain really came through in the Nasdaq, ending with cuts of over 1%. So you had shares of Apple, Nvidia, all, tanking big time. In fact, the other big cue that we're tracking from the global markets is that oil prices also hit a 10-month high. Like we were mentioning, this was yesterday itself, and that surge really continues. So now we're close to almost 91 per barrel in terms of oil prices. We also saw a big surge in treasury yields. So that also continues to, really pressure risk assets, of course, like equities. So like I was mentioning, tech was the biggest loser for the Nasdaq. It fell for a third straight day, and names like Apple, Nvidia all closed with losses of over 3%, like you can see on your screen. So that is where the pressure really came through for the US markets. But let's talk about the economy now as well. We have Steve, who's standing by to bring us a quick roundup of all of the highlights that came through in the Fed's latest Beige Book. The ISM Services Index print for the month of August, as well as, some comments from the Boston Fed president. So, Steve, take us through all of those highlights.
What we found in the Beige Book was they said economic growth was modest across the 12 Fed bank districts, but we're tracking the GDP number that's, 3, 4, some say even 5%. Beige Book said retail spending outside of tourism continued to slow, with some districts reporting consumers may have exhausted savings. We have retail numbers that have been off the charts. Also in the Beige Book, higher consumer credit delinquencies. Job growth was subdued. Jobs data was pretty good as far as I was concerned. Price growth slowed overall. That does seem to be comporting with the data. And businesses struggled to pass along costs. That told you that profit margins probably fell. Meanwhile, you had that ISM service index more in line with the data. Here's the data, 54.5, forecast of 52.5. All the major components were strong. New orders along with employment. That gave the market a scare this morning. Price components ticked up, not a good sign for a Fed focus on service inflation, but you can see in that chart we're well off the peak levels a year ago. All of this, the unevenness, prompting Fed officials to be, reserve their optimism when it comes to inflation. We had Susan Collins this morning saying the Fed is going to need to hold rates at restrictive levels for some time, while the Fed may be at or near a peak. Further tightening could be warranted.
All right, Steve, thanks a lot for getting us all of those highlights. But on that note now, let's also listen into some important opinion. This comes in from Allianz's Chief Economic Advisor, Mohammad Al-Arian. Listen into what he had to say.
I think based on the economic data and based on the fact that the Fed is highly data dependent, they will not raise rates this month. That's what the market expects. There's over a 90% probability that the Fed keeps rates as is. But what they will do is keep the door open for at least one more rate hike in the future.
Okay, it could keep the door open for one more rate hike, but he doesn't see one at the next meet. That is the word from Al-Arian. But that's what we're tracking globally. Let's talk about all of the overnight cues that you should track in terms of our own markets as well as the individual stocks that you should really have on your radar. So we have Ekta, Mangalam and Vivek all here to prep us up for this trading session. Guys, a very good morning to all of you. Ekta, definitely looks like the handover has not been good and we might start a little bit weak, but take us through everything that you're tracking.
Thanks for that. Well, yes, what we saw yesterday was that the markets did regain their intraday losses to close higher for the fourth straight day. So the market seemed to have shrugged off the weak global cues, the higher Brent crude prices, the FII outflows, which continue into today's trading session. Niche sectors in yesterday's trading session saw a lot of interest, such as sugar, paper, liquor. All of these stocks were higher. Now, overnight, yes, the global cues continue to be sluggish. So the US markets closed lower, weighed down by tech stocks as well as the higher treasury yields. We have Asia, which is mostly lower ahead of the trade data from China. We have the GIFT Nifty, which is indicating a weak start for our markets, and Brent crude, which continues to gain, so currently at around 10-month highs, scaled above $90 per barrel. So the setup seems to be weak, but the fact that we did recover from intraday lows in yesterday's trading session probably gives us a sense that maybe there could be some amount of momentum and buying on the downside. Flows, just watch out for the flow picture because that seems to be a little tentative now. FIIs have net sold over 3,200 odd crores in yesterday's trading session as well. 3 consecutive days of selling in 4 digits coming in from the FIIs. DIIs net sold around 274 odd crores. In terms of cues, the weekly options expiry separately, the G20 kicking off, so that all eyes will be on that. 13 September US CPI and 19 to 20th September we have the Fed meet as well. So a lot of cues in the next couple of days to watch for.
All right, Ekta, thanks a lot for laying out all of those cues for us. But let's also talk about the individual stocks that we should watch in today's trading session. Vivek has that entire list. Vivek, the key headline really came through from TCS.
Well, good morning. Absolutely right. Large order win, and that will buoy sentiment as far as IT sector is concerned. So TCS yesterday went ahead and announced a large deal from JLR. The size of the deal is quite significant in terms of it being $1 billion deal with a tenure of 5 years. Remember, JLR is an existing client of TCS. The other stock on our radar yesterday, which saw a sharp up move, was Tata Consumer. Yesterday, there were news reports that indicated that Tata Consumer was in talks with Haldiram to buy a significant stake in the company. However, post-market as yesterday, Tata Consumer as well as Haldiram have gone ahead and clarified that they are not in talks for such a deal happening. The third stock on our radar is Concord Biotech. It's a recent listing. The company declared its results yesterday. Steady set of numbers. Revenues higher by 7.5%, coming in close to the 195 crore mark. EBITDA up close to 11.5%, coming in at the 72 crore mark. Margins, expanding by close to 130 basis points, and profitability higher by 11%, coming in close to the 54.5% mark. Next stock on our radar is Biocon. Biocon Biologics has gone ahead and completed the integration of Vialtris biosimilars business in North America, and this has been done ahead of schedule. And lastly, Lupin, a very interesting update coming in over here. The company has collaborated with Mark Cuban's Cost Plus Drug Company along with COPD Foundation. Now, this particular collaboration is for pulmonary diseases and the treatment of that. So, interesting development coming in over there. It'll be interesting to see how the stock reacts to this particular update.
All right, Vivek, that's a lot of stocks. Thanks a lot for taking us through all of that action. Finally, let's talk about all of the cues from the futures and options space. Mangalam, we closed pretty much close to the day's high. We saw that recovery towards the end of the session, but take us through everything that we should watch this morning.
That's correct. So we've been slowly grinding higher, if one has to put it that way, on the frontline index because the range has been narrow, consolidation takes place, and eventually we end mildly higher. But at some point, something's going to give, and that's what the setup is telling you. Why do I say that? Because the Nifty, yes, progressively has moved higher from 19,250 to around 19,600 odd. But the FIIs, they've been selling in our cash markets consistently. Over the last 3 trading sessions, the sale has been near $1 billion. And yesterday, we saw both the FIIs and the DIIs sell in the cash market. And if you thought it was only the cash market, well, look at the index futures and the stock futures. FIIs sold 2,300 crores in stock futures as well, and that's not all. We saw a selling of nearly 33 crores in index futures too. The net longs are still at an even keel at 51%. It is Nifty options expiry today. Yesterday's options data, of course, was muddled because of the first weekly options expiry of the Nifty Bank on a Wednesday. So in terms of active options that the street is looking at, 19,600 put, that's been pretty active. That's telling you that, the street believes that there could be support between yesterday's low of around 19,500 to around 19,550 as well. But on the way up, we are seeing some sort of resistance coming by around that 19,650 mark. Were we to go ahead and cross that, a lot of people are taking punt purchases at the 19,700 call as well for a premium of around 6 odd rupees. And a lot of stocks, they keep entering F&O ban. It's just day 5 of the series and we have 9 stocks in F&O ban. And the latest entrants are Manappuram Finance and SAIL. Among the stocks that I'll be watching out for today, a lot of long positions added on Tata Consumer yesterday on the reports of that deal. Now, it will be interesting to see whether there would be some unwinding of those long positions on Tata Consumer. So that's the stock that should come up for you. And the second one is Axis Bank. The Nifty Bank has been underperforming. We saw a lot of short positions being added on Axis Bank.
All right, Mangalam, thanks a lot for taking us through all of those cues and stocks that we should watch as well. But with that, it is time for our first short break on the show. When we come back, the National Payments Corporation of India has unveiled a slew of new UPI launch products at the Global FinTech Fest in Mumbai. So we're going to bring you all of the details after this short break.
I would like to use this opportunity
Welcome back. You're still tuned into Power Breakfast. Now, speaking at the Global FinTech Fest, RBI Governor Shaktikanta Das says that they target 1 million digital currency transactions, that is by the end of this year itself. So let's listen in to what he had to say.
I would like to use this opportunity to urge and encourage the fintechs to establish a self-regulatory organization or a SRO themselves. From Reserve Bank, we are willing to engage with you In fact, we have self-regulatory organizations, what is called SROs, in other sectors. We are also targeting 1 million CBDC transactions per day by December this year. This will give us enough data points to study various design choices, use cases, and also behavioral patterns.
All right, those are some important highlights of the governor's address at the FinTech Fest. But some more news coming in. The NPCI also announced a slew of new product launches for the UPI platforms. This was also during the Global FinTech Fest. So Ritu is here to tell us more about that. Ritu, take us through what these new products are.
Well, the popularity of UPI has only been growing. It recently crossed 10 billion monthly transactions. And now you have the NPCI coming up with a whole host of new products that will only expand its use case. The first product that they launched at the Global FinTech Fest was credit on UPI, which was recently announced by the Reserve Bank of India. And now this feature has gone live across several banks like SBI, Axis Bank, HDFC Bank, as well as other payment companies, where customers can get pre-sanctioned credit lines via UPI itself. The second product which has been launched is UPI Lite X and Tap and Pay, which builds on the UPI Lite feature, which is for offline payments. You can preload your UPI app with some money, and you can use the QR codes, which are going to be using near-field communication technology, to just tap your phone and be able to make that payment. The third one is using conversational payments on UPI, and this product is called Hello UPI, which will allow for voice-enabled payments through UPI apps, through calls, internet-enabled devices, Alexa, for instance, where you can make payments. And the last one is Bill Pay Connect, which is essentially a nationalized number for bill payments. You can send a hi SMS and you can get the option to pay a bill, or you can give a missed call on the number. You'll immediately get a call back for verification to be able to pay your bills.
All right, Ritu, thanks a lot for that. That's a whole host of new launches being announced at the FinTech Fest. But moving on, some more news that we got is that Reliance Retail has signed a joint venture agreement to acquire majority stake in Alia Bhatt's children and maternity wear brand Edamama. Reliance Retail has said that they're looking to venture into several new categories, including personal care as well as baby furniture. And the brand also looks to launch children's books as well as an animated series. So interesting news coming in on that front as well. But with that, we're going to get into a short break. On the other side, we're going to talk all about the commodity markets, which continue to be extremely hot. So stay tuned, and we're going to bring you all of the details. Welcome back. You're still tuned into Power Breakfast, and let's talk about the commodity space now. Manisha joins us with an update. Manisha, take us through what's really happening, particularly in the crude markets now.
Well, yes, we have seen some extension when it comes to the prices, when it comes to crude oil prices. So we are still holding above $90 a barrel here. Apart from the Russia and Saudi Arabia cutting output, it also is about the U.S. inventories, where the markets estimate may see a decline of 5.5 million barrels in the previous week. That has been supportive. Apart from that, markets are anticipating that the demand from Europe and China would continue to improve, and that's keeping the prices above $90 a barrel. So while the crude prices have been gaining, we haven't seen that trend really in metals as a sector. With the dollar index at 105, there is pressure across metals. Also, the China service data did not come in so well. The Germany factory output numbers also were on the weaker side. And with the Chinese yuan trading at a 10-month lows, we are looking at pressure across metals as we start Asia.
Okay, Manisha, thanks a lot for getting us all of those details on what's really going on with the crude as well as the metal, prices right now. But with that, let's also move on and talk about the G20 now. The national capital is all decked up to welcome the foreign delegates from across the globe for the G20 summit, which will be held this weekend. The revamped Pragati Maidan has been decked up with lights and fountains ahead of the mega event in Delhi, and the summit will be held at the newly built state-of-the-art Bharat Mandapam Convention Center at the Pragati Maidan. Now, illuminated G20 logos have been installed throughout the Pragati Maidan tunnel as well as across the city. So that is what the prep work is really looking like for the G20 this weekend. But as we count down, sources have also told CNBC TV18 that India expects the countries to come to a consensus on common cryptocurrency norms. So this is some information that Sapna is picking up, and she joins us with the details now. Sapna, what are your sources telling you on this?
Well, first of all, so far as the India presidency of G20 is concerned, India has been a major contributor, on very important and a number of topics. For example, even as far as the issue of regulating or managing crypto assets is concerned, it's India that has brought it as part of the G20 agenda. And basically, probably the India presidency is looking forward to the G20 membership agreeing upon a common, common template for regulating crypto assets. I think this is going to be very significant going forward. Remains to be seen whether the G20 membership actually agrees to that or not at the summit. That's one. Second, also in terms of reforms for the multilateral banks, the reports brought in by Larry Summers and NK Singh together. I mean, that report is extremely important. In a nutshell, if at least some of those recommendations are accepted by the multilateral banks, that will create an additional lending headroom of around $200 billion over the next 10 years. So that's the significance, and over there also India has played a major role. As far as the debt packages for countries, weaker nations are concerned, here there is a bit of a pushback from China. That's also a well-known fact, but again, India has been a major contributor on that front. And last but not the least, also in terms of taking the climate change agenda forward, probably what has been agreed so far is that, in terms of how do you want to price, carbon emissions. So the options here would be that either you can price it or you can also not price it. So countries will be given options to have their own country-specific tools to basically handle the climate change transition. So these are some of the major areas in which India has contributed. And last but not the least, also in terms of taking the digital public infrastructure forward. Here the entire action plan for financial inclusion has been given a go-ahead. So far, of course, this will be discussed further in the summit. So that again is going to be very important from India's contribution point of view. There are some wrinkles over here. For example, there may not be a consensus as far as the communique is concerned because of the Russia-Ukraine war, issues like that. But I think that's supposed that the summit will deal with at its own level.
All right, Sapna, thanks a lot for getting us all of those details. Very important to track there. But with that, it is time for us to wind down in this edition of Power Breakfast with the news that all Asian markets are in the red. In fact, they've extended cuts also over the past 10-15 odd minutes. The GIFT Nifty implies around a 30-point downtick at the start of the trading session for us. So thank you for tuning in. We have Bazaar up after the short break to take all of this action forward.